Great. I have Michael Pearl here from Cyvers. Thank you, Michael, for joining Drilling into Crypto.
Hey Mo, thank you so much for having me.
My pleasure. So please, I'd like to start off by asking you, to introduce yourselves to the audience and more importantly, tell us about your journey. I mean, what were you doing before Cyvers, before getting into crypto, and how you got into crypto? What was the turning point that made you say crypto is my life's task?
Sure. So first of all, again, thank you so much for having me. I'm Michael Pearl. I've been in the crypto space since 2013. Currently, I'm the VP Go-to-Market and Strategy for Cyvers, and I guess we'll talk about Cyvers a little bit later. So just to follow up on your question, I started off my journey as a lawyer. Nobody's perfect, but that's what I decided to learn. Very quickly I figured out that, it's not for me and I wanted to go into kind of other realms. And I started off as a correspondent and an editor. I was in the financial media. And back then, I remember that I was exposed to crypto. First, I was exposed to fintech, which was kind of the buzzword back then. But then, I started seeing some meetups on Bitcoin. And it was fascinating because, it was a novel thing and I wanted to learn more. And I remember going to, meetups and you had like four people in the room trying to give you, paper wallets of Bitcoin. I should have gotten more back then. Maybe I would hold much more Bitcoin right now. Um, but it was very interesting. It was really hard to grasp, digital decentralized money and so on. And I kind of saw the evolution of crypto, in the beginning only Bitcoin and then Ethereum, and then all the idea of decentralized applications, Ethereum based smart contracts and so on. So I kind of saw the entire evolution, going to NFTs and DeFi, and I kind of grew my career along with that. First, I was involved kind of from the outside, covering this space, and then gradually I became more involved. So I was involved in several projects. I was working with Kirobo, which is now called Intentable. And about 2 years ago, I joined Cyvers because I really wanted to kind of see the intersection between AI, cybersecurity, and crypto and blockchain. And I'm really happy I did so because now I have kind of a unique perspective on, how this industry looks like, on all facets, but also the weak points of this industry, which is cybersecurity and fraud and scams. And I guess we'll talk about it in a second.
That's really interesting transition from actually it's pretty synergistic, from legal to security, because that consists of compliance, regulations, and I guess you got the backbone from law school, right? And working in the legal sector. But did you actually practice law, or was it just a shift after university?
Yeah, I did. I practiced law for a while, but I think you're right that the legal perspective is something that is very helpful because at the end of the day, I always say that if you want to succeed and if you really want to understand this world of blockchain and crypto, at the end of the day, you need to be a little bit of a lawyer because there's heavy regulation or lack of, and you need to also understand the financial side of things, which I learned while I was covering, the fintech space. And then you also need to understand the technology, and that is something that I've kind of, taught myself and learned from kind of mentors that I had. So the combination of three is something that gives you the right perspective on this industry.
Yeah, I can relate to that 100% because coming from a corporate finance regulations background, you see a thin line between what's compliant and what's not. It could be a very small thing that you do or do not do that puts you offside of the regulatory frameworks, or puts you onside. So that's really interesting transition. And then you said you guys entered into focus for security on AI, crypto, and blockchain. So where do you see this market going in terms of the cybersecurity requirements and even the overall security requirements of crypto and crypto fraud? In the early days, there was always a lot of talk that cryptocurrencies and Bitcoin are only used but for illicit purposes or illegal activities. Now the narrative has completely changed, from where we were 5, 6 years ago to where we are today with institutional backing and institutional involvement from the likes of governments, sovereign wealth funds, financial institutions, even private and public corporations adopting crypto as treasury optimization strategies. Like, now that you see this happening within this space, where do you see that, the most of them or most of the participants within the crypto industry are lacking in terms of security and fraud detection?
Yes, I think it's a very good question. I think that what I see is kind of two processes that are not really going at the same pace. So, on one hand, everything that you've mentioned, I totally agree with that. In the beginning, people were asking questions like, so what do I do with crypto? And, it's only for criminals and so on. And gradually, you saw that, the usability of crypto is becoming much, much more, first of all, mature but also widespread, right? So we went from being a very niche kind of anarchistic way of exchanging value and storing value and so on into stuff that are very tangible, right? The fact that you have, let's say, credit card issuers that allow you to spend your crypto for day to day. And in some places, you reside in Dubai, so you can even buy a house for Bitcoin. And gradually you see the institutionals kicking in. So you also have regulated and heavily supervised financial vehicles that allow you to gain yields and allow you to trade in a much more significant way. All this is great, but concurrently, the evolvement of the cybersecurity space within crypto is much more stagnant and much more kind of slow and gradual. So what I saw is that you can have crypto for good, and I really believe in that, and I think that again this is only growing and evolving. But in order for crypto to become mainstream, in order for the institutionals to feel comfortable with crypto, you need to have the proper guardrails. And by the way, you also need that with respect to the regulators, right? We were just talking about the legal side of things. And in order for the regulators to feel comfortable with crypto, the way they feel comfortable with money in the bank, you eventually need to have the proper tools and to have the proper processes to protect crypto. Because if even if you have the technology and the capability of doing all those great things with crypto, if your assets can just disappear in a heartbeat, and I mean we're finishing this year. This year started with the Bybit hack, right? $1.5 billion stolen. And by the way, this is what you hear in the news, but actually the bigger part is crypto fraud, where $30 billion were stolen this year as per Cyvers data. And this is not sustainable. At the end of the day, if you want to have a real economy, if you want to drag the moms and pops, but also the Goldman Sachses of the world, you need to have some more safety and security in the crypto space.
It, Definitely, but that's also on the the crypto startups, and at this point, the large crypto companies, the likes of Tether, the likes of Binance, the likes of these big crypto companies. They also have that duty to the market in order to make sure that it's safer and safer. And companies like Cyvers comes in and provides these advanced security and fraud detection solutions, but also the large players have a role to play in how secure and how safe this industry is. Uh, I think also there's another thing that came up that I learned about this year. Honestly, is Flash USDT, and
Mhm.
address poisoning, for example, and stuff like that, which I only learned about this year. And I'm trying to wrap my head around this type of fraud. Like, what is Flash USDT, and how do people fall victim to it? Have you looked into that?
So I haven't looked into Flash USDT as much, so I cannot comment on that. But I can tell you about address poisoning, which is something that we see a lot in Cyvers, and we're combating it along with our clients. So just a quick explanation on what this is. Essentially, given the fact that most of us, when we send crypto, what we do, we usually go to Etherscan. We see the last. Let's say if you send frequently to a certain address. So you go on Etherscan and you just copy the address and you just send it to the same place. What usually those perpetrators do, they are sending you very small amounts, or they can send you even big amounts with some coins that have no value at all, some tokens that they created on their own. And eventually you see in your log, you see multiple transactions from that address. And the thing is that this address is generated in a way that it looks exactly like the address that you frequently send funds to. Because obviously, first of all, because of the string that you see on the screen, it's usually cut off, right? So you see the beginning and the end. And when you look at it, prima facie, it looks exactly the same. So what you do, you copy the last address because again, it sent you funds. And then when you want to send, I don't know, 10,000, 50,000, $100,000 worth of, let's say, USDT, you send it to that address. And then, let's say if you send it to your family member or to a vendor that you're working with, then eventually you find out that, they didn't receive the funds. Then you start checking and you figure out that it wasn't the right address. So this is extremely frequent. It is something that we see in our feed and our system every single day. And I think that what's more interesting is the fact that most people have been address poisoned. So most wallets right now already have this in them in terms of the potential because these sending the sending part, the preparation part is happening obviously on a much larger scale than people who are actually falling for that. So almost everyone, and I urge you to go and check your wallet, almost everyone has the potential of falling victim to that. And that is something that we're combating. Obviously, it is advised as a private user to always make sure that you send to the right address. But from the more kind of systemic point of view, we are working with multiple wallets and exchanges on helping them to prevent it because you can actually see when a person was address poisoned and you can warn them and you can blacklist some of the addresses that have address poisoned them to basically prevent it even before it happens.
And how do you prevent it before it happens?
Okay, so let's say that Mo has received, small fragments of Ethereum from a wallet that poses as the wallet that you usually send funds to, right? So what we can do is, first of all, we can identify that, right? We can identify wallets that are affiliated with address poisoning networks, and we can just block this wallet. So let's say if I am working with your wallet provider, we can just blacklist this wallet, and then you will not be able to send funds to it. So even if you make the mistake and you copied that address, you will be, I don't know, either blocked or advised not to send funds to that wallet. And even before that, if you were address poisoned, I can tell you that, listen, these small amounts that you just received, those are not real transfers. Do not engage with this wallet, right? So eventually you can have the proper tools to refrain from losing your funds in that way.
Is that a simple integration on your exchange account, or is it a separate solution that have to be taken on by the client?
So it's a good question. So from our side, as Cyvers, we can identify those wallets very easily. And if an exchange or a wallet wants to integrate with us, they can have this feed of basically alerts in a matter of 5 minutes. Now, what they choose to do with it, obviously, if they have to build some sort of a logic on top of it and to integrate this into the system, and to have this in a user friendly way because they obviously they want to balance, exchanges are supposed to provide you with the liberty to, to engage with any wallet that you want. So I guess it is sensitive, and they need to figure out some sort of a policy. But technology-wise, the integration is something that can happen in 5 minutes.
There's there's been recently a lot of I think mainly in North America, a lot of news on retail crypto scams, like because of ATMs. I'm not sure
Hmm.
if you have any insight on that, like
Of
ATMs.
course.
Yeah,
Yeah, of course. So first of all, obviously, an ATM is at the end of the day, it can serve as a mean to allow you to buy crypto and to sell crypto. But obviously, if the ATM is tricked, in some way, either by the operators, which is obviously not very likely because they do want to continue operate. But if somebody managed to hack into the ATM, whether from the Web 2 side of things, because what you see when you engage with the ATM, the front end is essentially a Web 2 application. And if you can trick it, just to give you an example, in the Bybit hack, just to simplify it, at the end of the day, what the signers saw was not what really happened on the blockchain. And this discrepancy between the front end, because that's what we see with our own eyes, and what's happening on the blockchain, because presumably you need to have a connection between the button that you hit on the front end and what actually happens with your funds on the blockchain level. But in many ways, hackers can detach from that, right? They can detach between the two, and then obviously your funds can go elsewhere. But I think the more interesting and kind of the more frequent thing that we see right now with respect to scams, by the way, with ATMs or on other methods like on actual exchanges, is all these types of what we call authorized fraud, right? So authorized fraud means that I haven't, hacked into your wallet and stole your funds, or tricked you in some way to sending your funds without knowing it. You are sending your funds knowingly to an address, but what you don't know that the person on the other side is not who you think he is or she is, right? So the background of that, and there are many juicy stories which are very unfortunate. It can vary between kind of on the low level. It can be just, romance scams and small investment scams where, a beautiful girl approaches you on Telegram and, quote unquote, by mistake, you start the conversation, the relationship evolves. Sometimes it can last for months. And then eventually she tricks you into sending funds. In other cases, it might be someone that approaches you and offers you a very lucrative investment scheme. And by the way, at first you might actually get yield from them. That's the interesting part. It's sometimes referred to as pig butchering.
yeah,
Sorry?
I've seen that with some people, and it happened a lot. I was almost a victim of that, but I realized even like with email phishing and scams, there's some simple logic things that we as consumers forget about. Is check the domain name, for example, where this email is coming from, right? Is it really from DocuSign, or is it really from your bank, right? Is the email seem fishy? Just by then, I just delete and put the email into spam and block it. Is someone offering you high returns and like get rich quick schemes? These are things that I think, you have to go back to your reasonable and logical mind to detect. But beyond that, given where technology is going, given where AI is advancing and how it's being integrated with crypto, these scammers are becoming more and more sophisticated that, they come to a point where they can scam you, and doing that pig butchering thing, where people offer you yield and you're actually receiving income from them, I it's easy to fall victim to that, right?
I totally agree with that, and you got to the more interesting part because I think that before we dive in, I think that it's useful to understand what's the kind of the back office of all this operation. So for the most of it, we're not talking about individuals that are just trying their luck. We're talking about huge criminal networks. Most of them reside in Southeast Asia, Cambodia, Myanmar, but not only. where people live in actual labor camps, right? People are tricked into going there from many different regions in the world, from India, from places in Asia, and eventually they are living there. I'm saddened to say, but as slaves. There was a great piece in The Economist and the podcast about it, which you can read. We're talking about billions and billions of dollars that are being processed. By the way, an individual from Cambodia was recently arrested by the U.S. Federal law enforcement, and what they do essentially, each such person operates several phones and several computers, and they converse with several people throughout the day. And they can be whoever you want them to be, right? They can be, a beautiful lady from Germany. They can be a successful, businesswoman from, Malaysia, whatever, right? They can have any identity. Obviously, AI helps with that because we read, about deep fake with respect to politics and things like that, but we don't think as much on, the other usages of deep fake. And they can, generate any domain that can resemble, as you said, to a real domain. In some cases, this even involves, and I'm talking about kind of the higher end of these scams, that can even evolve real life actors, right? So not only, individuals are being tricked to invest small amounts into that, but somebody can approach, a successful banker, or a businessman and a lawyer, whatever, that has sufficient funds to offer them something lucrative, and to eventually even set up an office in New York, or in London or Singapore. And that is all happening. That is not getting the right news as it should. But eventually, you know what all this sums up to? A person hitting a send button on his wallet and sending the funds willingly and knowingly to that wallet, because all the rest is a facade, right? It's all a charade. But at the end of the day, the person decides to send his funds willingly. Now, luckily, that is something that has a solution, because even if all your check boxes that you've mentioned earlier, check this and check that, and having common sense and so on, if you were tricked throughout the way, at the end of the day, when you hit that button, if you have the protection like Cyvers provides right now, you will see that this wallet is not who you think they are, right? So you will have a pop-up, or this will be blocked, and you will be notified by your, let's say, exchange, that you should not engage with this wallet because it is not who you think they are. And we're right now working with, you mentioned Binance, and crypto.com, and a bevy of other exchanges that are working with us, where if you eventually send the funds and you want to issue the transaction, you will be stopped at the last moment thanks to the information that we provide to them.
Yeah, you also mentioned willingly, willful conduct, willful misconduct. That's a legal term. And it's very hard to then go into a case and try to prove that you were scammed into willingly sending funds, right? So this is the art of these scams, is that, and especially crypto, and specifically because there's no intermediary, right? So, it's a feature, it's good, and it's risky for people who don't know how to use crypto, but there's no intermediary. So you sent it willingly to, from person X to person Y, and from a legal term, with your lawyer hat on, how does that willful sending of crypto to a scammer look like in a courtroom or in a case file?
So I think the first of all, you're right, but I think the bigger problem is the fact that even if legally you can claim something, you will never know where the funds went to, right? I mean, let me kind of tone it down. You, for the most of it, you never know, right? And even if when they have obfuscated the trail in a way that you cannot really get to the funds in an effective way, right? Because usually we're talking about jurisdictions where you don't have any power on, and eventually they launder the funds and you cannot really trace them in an effective way, especially when time passes by. Because if you act immediately, then maybe you can freeze the funds through Tether, or maybe you can contact the exchange if you can trace it to a specific wallet. But it's very hard to do that. But you know what's the interesting part is not even the legal side of things, it's the psychological side of things. Because
That
the majority of the people, sorry?
I'm saying that's detrimental to most people.
Yes, but also the majority of the people would not admit it, right?
Mm.
So if you were tricked, unless you lost all your funds and then I don't know, you probably cannot hide it anymore. But if you lost $10,000 and that is something that you can kind of internalize and handle, then you will just say, that's life. I was tricked because you will be ashamed to admit it. Not that you should, right? I'm just saying that
Yeah,
that's what most people do, and that's the reason why it is underreported, right? We don't see this phenomenon as it should be, which is much larger than what we read in the news. And I know that because I see the numbers, but people are not aware of that. It's actually much bigger than hacks, and it's more painful because it affects the end users, the small individuals.
yeah. You said something about once you send them their funds, it's hard to trace it because by that time they've already laundered the money. That's a good segue for me to touch on this final topic, which is AML and terrorist financing, which is a really sensitive topic in the financial services world, specifically, right, within the financial services sector, especially financial regulators that are, building robust frameworks. Hats off to, you know, uh, the ADGM in Abu Dhabi and other regulators within the region that have come up with really robust frameworks for crypto compliance with AML and terrorist financing for firms who are registering. Where do you see the market? So, what are the main challenges that financial services companies are facing right now in terms of anti-money laundering and terrorist financing, especially large exchanges, that have large volumes, some of the largest, and we've seen, stories and public uh, publicity and public issues about certain exchanges that have faced uh, scrutiny from whether it's U.S. regulators or otherwise regarding their AML and terrorist financing policies and procedures internally. So, where are the main challenges right now? Are these things still happening on exchanges, right? And how to address it within the market? Because some of these exchanges, I'm not uh, I'm not providing any allegations or anything, but I'm just saying some of these exchanges might turn a blind eye to certain activities because of the volumes, for example, because that's where their revenue comes from. Or some of these exchanges might not even have internal policies and procedures that are robust enough to detect and support them with this while maintaining the ability to scale and offset whatever they lose from these illicit funds with legal or compliant funds that come into the platform. So there's that thin line between integrity, ethics, and morals of an exchange, and how we funnel money through the system of cryptocurrency and blockchain. So I want you to give us like at least 2 to 3 minutes on AML and terrorist financing.
Sure. So, contrary to what I said earlier, that I think that, and you said it very well, that, it is the obligation and the duty of the exchanges to actually be proactive about security and preventing fraud and so on. I totally agree with that. I think that with respect to anti-money laundering and terror financing, in an ideal world, I would love for the exchange to be, proactive about it, regardless of regulation, and to not want to funnel these funds through their system and so on. But first of all, it's very different. When an exchange like Bybit loses $1.5 billion, which is obviously bad for business, right? So So even from a pure business logic, they or any other exchange should be more proactive about their security. And then when their clients, when lose an accumulative sum of, let's say, 1.5 billion dollars together, that's also, and that's, by the way, the numbers that we're talking about for the large exchanges, billions of dollars, that are, just to give you one number, we prevented this year $600 million in fraud. $600 million. And obviously we're serving part of the industry. So that just goes to show the magnitude of that, right? So going back to that, an exchange does have, a responsibility, and it's also in their best interest to protect their assets and their clients' assets. But when it comes to AML, I mean, both of us can see why it's not kind of in their first priority to deal with that, right? Because everything has a cost, right? Because when they stop funds, they, close wallets, they have less volume, less transactions, less fees, and so on. And also, all these things are very kind of gray area because oftentimes, things are not like it's kind of a scale, right? Between 0 and 100, right? A risk scale. So you cannot always tell whether the funds are indeed, illicit funds, whether it's, terror financing, drug financing, stolen funds from a hack, and so on. So it's very hard to tell. So then you go into disputes, and you need to hire compliance people, and you go into lawsuits and so on. So it's a huge headache for them. I'm saying all that just to emphasize that AML, essentially, if you want to do it in an efficient way in a society, that is something that should be regulated. I'm not a big fan of regulation, but I'm saying that, and again, I would rather, prefer that, exchanges are proactive about, security and fraud prevention and so on, because it's in their best interest. But when it comes to AML, at the end of the day, you need to incentivize them. You need to, the regulator needs to set very stringent rules. They need to have effective ways of monitoring the execution of those rules, right? And they also need to give the exchanges some tools to deal with that, right? Because not everything is so easy to trace, and also they have to guide them. They have to give them firm guidelines. Now let's talk about, and by the way, don't get me wrong, right? I think that money laundering is a huge problem. It's also part of what is feeding this nefarious industry that I was talking about with respect to fraud, right? Because it's all interconnected. And obviously, terror financing is something that we should stop immediately. But the way to get there is, again, by the regulators being realistic and very involved and very proactive. Now, let's talk about the tools for a minute, because we need to understand what's possible and what's not, right? Because crypto is to some extent anonymized, to some extent decentralized, and so on. We all know that, right? But you do have amazing tools that can help you to actually get some context about funds. One of the problems that we have right now, that some of the tools that, and I'm not going to name names, right? But some of the tools that we all know and everyone uses, they are quite static. Now, what do I mean by that? I mean that, how do you label something as illicit funds? How do you label funds as illicit, right? You can say that they originated from a wallet that was involved in some sort of a nefarious activity, or they received funds from a wallet and another wallet, and eventually you can track it back to some nefarious activity and funds that you labeled as malicious. The problem here is that these providers, they usually do it in post-mortem way, right? So yes, so we identified someone. The FBI caught a person, and then they find an address, right? They check and they see that the address belongs to that person, and they label the funds as malicious, and then all his prior transactions are deemed as malicious, right? And you can do some tracing, some automated tracing or manual tracing, and you can see kind of how those funds proliferated. And yeah, if you catch those funds in some exchange, you will freeze them, right? But this is too little, too late, right? Because at the end of the day, it's only a small fragment of the actual illicit activity on chain. So that is why you need to be much more proactive. One of the things that we do at Cyvers is essentially all our platform is real time and dynamic. So if a wallet receives funds that are deemed as illicit, it is labeled in a split of a second, right? So then if you as an exchange engage with that wallet, you will be warned, right? You already have the alert not to proceed or to cancel the transaction or however you want to handle this. So bottom line, dynamic and real time compliance is what's needed right now for the industry if it wants to be serious about money laundering. And another thing, we talked about AI, right? So at the end of the day, manual labeling and even automated labeling is no longer sufficient. At the pace of things, the amount of transactions that you have on the blockchain and the speed of things and the way that now you can automate transactions to go through multiple players in one atomic transaction, you need to have a very proactive but also smart as in AI smart system that can actually map, the relationships between the wallets and map the sequence and to trace
That's
the funds.
that's
Yeah,
incredible technology, honestly. For AI to get this far within crypto space, I think that's really incredible technology. And I agree that regulators are also responsible in providing these tools and solutions and taking up some of this cost if they're going to impose, you know, these regulatory oversights and the requirements on these exchanges. Uh, Michael, on that note, honestly, I really appreciate your time and thank you for joining Drilling into Crypto.
sure.